And our first speakers tonight are going to be George Wooding and Bill Mandel talking about an generous donation that Bill wants to make to preserve open space in Twin Peaks.
This is George Wooding. I'm speaking on behalf of Bill Mandel. Bill has the great fortune of owning the land at the base of Twin Peaks Boulevard. I'm sure everybody who's ever been to Twin Peaks has been by that property. It's 4 lots, and Bill decided they changed the zoning. And what happened, he was going to build a certain number of homes, and then the state allowed him to build up to 80 units. But he felt, Bill, jump in if you, I don't want to take anything away from you. He felt he'd rather donate the land to the citizens of San Francisco. So, incredibly, he's had a lot of problems from the city of San Francisco donating this land. So, just coincidentally, he contacted me, and we've been working together to apply pressure on the city to accept some sort of donation for the property. And I think that's a good start. This will be a great, beautiful uh, piece of land and property for, they just broke ground on the promenade at the top of Twin Peaks. And this will take you right up with native plants all the way to the top of um, Twin Peaks. So, it's extraordinarily generous of Bill to go in this direction as opposed to either develop the property or possibly sell it to another developer who will then develop the property. So he's an all-around nice guy, and he's local. His family, he grew up in San Francisco. Um, and without further ado, I want to introduce Bill Mandel.
Thank
There
you,
you go,
George.
Bill.
Thank you. I think George pretty well said it all. I don't intend to develop the lot myself, and I would prefer to make a donation of it to Recs and Parks. And with George's help, I've been working through City Livable, Sutro Stewards. I've also involved the Smith Foundation out in Marin. I've been in contact with the Trust for Public Lands, the Nature Conservancy, and as I said in previous meetings, it all seems to circle back that everybody's saying, well, San Francisco Recs and Parks are your best donee to receive the property. For various reasons, these other organizations are not IRS designated as officially open space, or their mandate does not include a property like this. And so we are back to dealing with, at this moment, at least San Francisco Rec and Park. And I'm hopeful we can get some traction with them. I just found out today they're asking for a meeting on Thursday. Well, they gave us 2 times. George and I will be talking to them Thursday at 1:30. And I'm hopeful that maybe we're going to get some positive feedback that they want to accept it and they want to outline the process of doing that. This is a guess on my part. And if not, I guess we'll be reporting back to you as to what didn't happen. At any rate, I'm happy to answer any questions. My goal is to get this done in 2026. And I would love to have that completed and have it kept as open space.
Jean Barish, you're our first
Yeah,
question.
thank you. I had to step away for a minute, so maybe you already answered this question. First of all, I think your offer is incredibly generous, and thank you very much. It's greatly appreciated. I have had some bad experiences with Rec and Park. And, the general manager has changed, and so maybe things will be different in the future. That said, if you were to donate this to Rec and Park, would you have any conditions for how the space could be used? Would the donation include that, or would you just give them the rights to the land and they could do whatever they wanted with it? It seems to me it would be important to have some strings attached to make sure it gets used for whatever purposes you want to have it used for.
At this point, I wasn't anticipating any requirements on Rec and Park. I don't know what would concern you about them doing
Well,
with
Rec and
the.
Park has been known to take public land and privatize it, charge admission fees for certain things, increase their admission fees without due process, change the use of the land for various reasons. I'd have to think of some examples. I know there were some issues in Golden Gate Park regarding tennis court rates that went up. I was involved with a big dispute involving the installation of artificial turf instead of keeping natural grass in part of Golden Gate Park. Those are the first two that come to mind. I've read about other issues, the changing of the land from one purpose to a dog park or taking away a dog park and putting something else in. So they're all, those are just a couple of random examples that I can think of.
The feedback I've gotten from Tom Radulovich from City Livable was that if they were to accept the donation, they would keep it as natural space.
Well, I think that should be in writing.
Okay, that's a good idea.
I think you should talk to a land use attorney or somebody who's familiar with, the terms and conditions of a donation like this before you just give them free rein. I really believe that's important. I'm a lawyer, and risk management is like my biggest hobby. So I'm telling you this just to avoid problems in the future.
Okay.
Okay. And I have a
I'll
question.
definitely look into that.
My question is, I believe there's a petition that we could sign. You
So
mean on our webpage?
on your
It's
webpage,
on the front page.
It's on the front page of csfn.net.
yes.
Glenn has the next question.
Yeah, I was going to say if a bare minimum, you ought to have California native plants be required to be planted there. That's all. I think that's the most important thing. I mean, I'm unfortunately, I'm right across the street from Brotherhood Way, and all they have here is plants from Australia and New Zealand. And it's quite disappointing.
Mm-hmm.
Thank you.
Patrick Wolff, the first of the three insurance commissioner candidates who will speak tonight. And this is a very important position. So Patrick, tell us about your background and why you want the office and what you're going to do once you're elected.
Yeah, absolutely. Thanks. Thank you so much. And it's a pleasure to be here. Deborah is literally my next door neighbor. We've known each other for many years. But what Deborah may not know about me is that in the early 2000s, I spent 4 years where my job at a big bank was to build and then run an auto and home insurance brokerage business. So I spent 4 years from 2001 to 2005. We built it. We brought in fulfillment partners. I oversaw the marketing, oversaw the fulfillment. We had a dozen different insurance companies on the platform, selling insurance, auto and home, all across the U.S. And then eventually, we made an acquisition, the bank, and brought it in and so forth. That was my job for 4 years. I really got to know auto and home insurance from that perspective. And then for the last 20 years, I've worked as a financial analyst and an investor. So I worked at a hedge fund for some years. I ran my own hedge fund. I've been a public market investor. Certainly insurance is not the only thing I've invested in, but I have a lot of experience doing financial analysis of insurance companies and insurance markets, in addition to the operational experience that I have from the time that I spent overseeing a brokerage business. And early last year, when these terrible, terrible fires broke out in Los Angeles, I was drawn to taking a deep look at insurance in California. Something I'm sure Deborah does know about me is I've been very, very involved in state and local politics over the last decade, from a number of different issues. I'd never really taken a deep dive into insurance before, but as I really took a close look, I came to understand that we've had really dysfunctional regulation in California. There's a lot of places where it's difficult for people even to get home insurance. A lot of the insurance companies have been leaving California. And I spent 6 months really analyzing this and decided this is a job, this is the way that I could serve best. And, our son is at college, our daughter's senior at high school, she's just about to go to college. And so it's really the perfect time for me personally to step forward and put myself forward to do something like this. And so after taking 6 months, really diving into it, thinking about it hard, researching it, I decided I'm going to go for this. I'm going to run for this job. Because the thing about insurance commissioner is this. The job of the insurance commissioner is to oversee the Department of Insurance and is to make sure the insurance regulation is done properly. In most states, the job of insurance commissioner is actually an appointed role. It's only elected in 11 states. We're one of those 11 states. It's a very technical role. It's a role where you really do need to understand how insurance works from an operational, business, and financial perspective. But it tends instead to attract career politicians, because it's sort of one more statewide elected job. But I think it's really very different than most statewide elected jobs. And I think that's part of the problem that we've had in California. So briefly, I'll describe what I'd like to do from a policy perspective. But before I go into that, just a couple quick things. One is I do have a website, which I should have launched. I should have put in the chat, but I will do it now. It's basically just and so you can take a look at, I have a detailed policy platform there, which I'll describe briefly in a minute. Second thing is, I'm very proud to say I'm endorsed by the San Francisco Chronicle, and I am endorsed by most of the major newspapers up and down California, because I think that what they've really come to see is that I bring expertise and a real focus to this job, that I'm not a politician, and I'm not doing this to launch a political career. I really want to emphasize that. I'm never going to run for any other political office. That's a pledge I've made. I'm not going to accept any corporate gifts while in office. I'm not going to work in industry after being insurance commissioner. I'm 100% focused on just doing this job. So briefly, my policy platform is organized around a couple big ideas. One is holding insurance companies accountable. And basically what that means is market conduct regulation. We have not done a good job in California of regulating the behavior of insurance companies so that you can really be confident that the terms are clear, the coverage is adequate, and importantly, that when it comes time to pay claims, that you can be confident they will pay claims. So one of the things I want to do is take information that already exists at the Department of Insurance and use it. They collect this information on how insurance companies pay claims, but the insurance companies have lobbied for years to keep that information anonymous at the company level. I'm going to make it public. I'm going to create a public scorecard on every single insurance company so you can know what the real behavior of each insurance company is. I think that's the kind of thing that's really important to empower customers. So holding insurance companies accountable. Second big idea is increasing choice and competition. We are suffering from a lack of choice and competition in California. It means that you don't have the best available rates. It means we're not getting the best available service. In most parts of the country, most states of the country, it takes about 60 days for an insurance company to file its product or price and get it reviewed and approved. In California, it takes over 300 days. It takes over 300 days because we have micromanagement and bureaucratic red tape, and we can cut through that and really streamline the process, as I've seen done in many other states. The third thing is improving transparency. I want to publish an annual report each year that tells you how California's insurance market is really performing in terms of price, in terms of availability, in terms of service. And then finally, we have to lower the risk, particularly of catastrophic wildfires, because ultimately lowering the risk is how we lower the cost of insurance and, of course, also save lives and property. There are things we can do to much better align the guidance that insurance companies provide to homeowners to make sure that homeowners are taking the right actions and providing assistance to homeowners to take those actions to harden their homes. And there's things the state can do much better in terms of managing our lands. So that's a brief overview of some of what I want to do. Again, I have much more on my website. I encourage you, please, to take a look at it. I'd be very, very grateful for your support, and I'm very grateful for the opportunity to talk to you tonight. And if I know that there's a couple of my competitors will be coming on in a couple of minutes, but if you have any questions, I'd love to take them right now. Thank you.
And Mary Eliza, you have the first question.
Have you spoken to any actuaries about how they rate the various buildings or whatever it is they're insuring? I'm assuming we're not talking about health insurance here. We're
Correct.
just
Yeah,
talking about property insurance.
that's right. Yes.
Okay, but that does get into health as well if somebody is killed in an accident or whatever because of a fire. So that would be my first question is, have you spoken to any actuaries about what their process is for coming up with their risk analysis? And the other one is, I understand that there's no reinsurance in the state. Is that correct? And that that's
So
going to be fixed?
So the answer to your first question is yes, I have spoken to actuaries, and one of the big problems we've had in the underwriting of insurance in California is for years the regulation has not allowed insurance companies to use forward-looking models to predict the risk of catastrophic wildfire. They've had to use a 20-year look back, which is crazy when you think about it, because we all know that climate change is real, and climate change means change, which means that the risk is different going forward than looking backwards. So it's a great example of sort of bureaucracy run amok, and that's starting to change, and I'm going to make sure that that continues to change. And then your second question about reinsurance, a similar issue. There was also a regulatory issue that is starting to get fixed, which again, I'm going to make sure continues to get fixed, which is that insurance companies were not allowed to count the cost of reinsurance in their allowable rate of return. Insurance companies have to file their rates, and they have to file what they believe their rate of return is going to be, and they provide their economics. Reinsurance, as I'm sure everybody knows, is a very normal part of the insurance industry where insurance company purchases insurance. It allows them to spread the risk more widely. It's a very important part of the industry. Well, for years, California's regulations have not allowed the cost of reinsurance to be counted in the allowable rate of return. It's obviously crazy. So that's starting to change. I'll make sure that continues to change. The reinsurance market globally has been in what's called a hard market, which is just a fancy way of saying prices have been high. Those prices are starting to come down now. That's a very typical feature of insurance. As more capital comes in, the prices start to come down. So that market's working better as well. George, did you have a question?
Yeah, I did. Thank you, Patrick. Why do you think so many insurance companies are, I think you've answered some of this,
Yep.
companies are leaving the state of California? I mean,
It's really it's a couple of things. One is it's this inability to calculate their economics rationally in terms of using forward-looking models to price wildfire risk, in terms of being able to count the cost of reinsurance. So that's been a factor. And the other factor, and this is one of the things that's really, really pernicious about our regulation right now, we make it so difficult for insurance companies to come to market and file and get those filings reviewed and approved that we end up having a relatively concentrated insurance market. And that means the insurance companies have power, which is exactly what you don't want. You don't want insurance companies to have market power. That's crazy. You want to have robust competition. But we've not been making it easy for insurance companies to come and get their filings reviewed and approved. So that bureaucratic bloat has really been getting in our way. And that's something I'm very, very committed to making sure it gets fixed.
do you think because of the uncertainty, insurance companies in California automatically have to charge more because it would reduce the uncertainty?
I actually think it's a little bit the other way around, which is that when we have a stranglehold and there's only a few insurance companies and it's very, very difficult for competitive rates to come, that makes it harder for the market to be competitive to get better rates. So the easier, it's not that they have to charge higher rates, it's that we've created a system that allows them to charge higher rates. So it's really important to clear that up and get much more competition. And just very briefly, I saw this when I was running this in brokerage at a bank because I saw how customers would get competitive quotes from many different companies, and oftentimes different companies, name brand, very well-established companies, just their risk underwriting is very different. And so you get very different pricing, and the customer gets the benefit of that. And we've got to have that in California.
Well, I was before this meeting, I was reading about insurance, and in California right now, at least in San Francisco, the cost of insurance from 2022 to 2026 has increased by 30 to 33%.
Mhm.
So, I mean, we're not just raising the rates, they're skyrocketing right now.
Yeah, I agree with that. I agree with
So,
that. And so we have to take all these smart actions to reduce risk, but we also have to foster a much more competitive market. And again, really holding insurance companies accountable. I can't stress that enough. The market conduct regulation is incredibly important. The point of insurance is not to pay the bill. The point of insurance is when you need it for them to be there. That's why it's so incredibly important that we have smart regulation to make sure that you can count on the insurance and get a much more competitive market so we
so,
get the best possible price
so
and the best possible service.
if I was to define a lot of what I've heard from you, it would be you would like to see more competition and open up California to more insurers. Is that a fair statement?
100%, but always, always, always coupled with holding insurance companies accountable. It's something I always stress because it's such an important part of the job of the insurance commissioner, and it's something we've not done a good enough job of.
Okay. Thank you so much.
Oh,
My pleasure. Thank you.
Bill, you're next, and then Mary Eliza.
Yes, thank you. Patrick, I've unfortunately had the experience firsthand of dealing with a fire loss
Oh my
with an
gosh.
insurance
Sorry.
company. During the 2019 Kincade fires, I lost my home.
Oh
And
wow.
dealing with it was State Farm
Oh God.
was
Now I really feel bad for you.
was death by 1,000 strokes.
Yeah.
And your comment about market behavior resonated with me because of that.
Yeah.
As a business owner, what I'm now experiencing with that carrier, who had the bulk of my insurance, both personal and business wise, they're picking and choosing what they want.
Yep.
They're cherry picking.
Yep.
So for example, if I have a property under an LLC, for no apparent justification, they're not doing LLCs anymore,
Yep.
which is forcing me now to search for other insurers that will cover me.
Yep.
And just like everybody else, whether it's on your personal residence, the business side has gone sky high.
Yep.
I just think the market behavior and opening it up to more competition really, really important based on my firsthand experience.
Yeah, well, completely agree. I'm sorry to hear about your experience. And one quick thing I'll say, State Farm has 20% market share in California. And just to be clear, I'm not a terribly big fan of State Farm. State Farm's made a lot of people very upset, particularly in the LA area over the last year and a half. The solution is not only better regulation of State Farm, it's bringing a lot more competition in. The
Absolutely.
best way to deal with a bad company is to get good companies in.
Yeah. Yeah.
Yeah,
Agreed.
absolutely.
Thank you.
Sure thing, Bill.
Mary Eliza?
Yeah, I was just wondering, do you have any kind of an idea about what the percentage is of catastrophic claims versus what we would call like ordinary claims?
You
And
know,
also, what we're hearing about now is there are these laws that are set up that require certain protections for buildings and individuals that live in certain communities that have no fire exit out of their community. And the state legislators are trying to override these protections that are built in. So how wouldn't that make the insurance companies not want to insure those properties if there's no outs, if there's no way to get people out if there's a fire? Like
Yeah.
what's going on in San Diego right now, Northern San
Yeah,
Diego?
yeah. So you take each question in turn. So I don't know the precise numbers, but the basic breakout, most fires are not catastrophic. They're not like wildfires. Most fires are individual structure fires, home fires, building fires. Um, but it's the catastrophic ones, it's the big ones that really drive like the big swings in financial performance. So don't take this as gospel. I'd have to look it up, but I want to say something like 80-90% of the total losses are normal losses, if you will, not catastrophic. But then in a given year, right? Obviously, last year was very extreme. There are some years where you don't really have, and then there are some years where you do. So that's sort of how that kind of looks. And the market needs to adjust to that. And to your point, Mary Eliza, like, I can't answer specifically because I don't know like the specific things that you have in mind, but I agree with you wholeheartedly that part of the job of good regulation is really thinking through what are the consequences going to be all the way through. There are some times when putting in place protections actually just raises the cost for everybody. And so it may look good, but it's actually making things worse for the general population. Then there are some times when putting in protections is actually much better for everybody, exactly like what you're describing, where if everybody knows those protections are in place, you have the confidence for the insurance companies to be able to underwrite and nobody can get out of it. And so that leads to a general overall higher quality or safety level. It really, really does depend on the particulars. You have to take a look at each situation in particular. Deb, why don't we take one more? Because I know that the others may be coming soon. I don't want to take too much
Yeah,
time.
no, Ben Allen's coming around 7:10. And I didn't hear it this time, but am I not correct? Didn't you get your insurance broker's license?
Yeah, so I wouldn't quite say that. What I would say is I passed the exam
Okay, you passed the
for
exam.
property and casualty, and I did actually go to the Department of Insurance. I filed it, and so I've got like my number. I can't sell insurance. I don't have any relationship with any insurance company. I'll never sell any insurance in my life. But I did pass that exam because I thought it was a great way for me to really learn the nitty-gritty of how insurance operates.
The second insurance candidate tonight to speak. So, Ben,
Right.
please tell us about your background, why you're running for the office, anything you want to say, and then we'll open it up to audience questions.
Fantastic. Well, thank you. Thank you, everybody, for this opportunity to have just a quick chat. Ben Allen, I'm a member of the state Senate. I've been representing portions of Los Angeles now for over 10 years. I've been big environmental protection person. Was the lead author of the big climate bond that we all passed together just a couple of years ago, which has now produced significant resources to improve our water infrastructure, our fire resiliency. Fire was the biggest component of it. I'm also somebody who's been active and very committed to political reform, transparency, ethics issues. I've been ranked #1 in the legislature by the California Clean Money Campaign, literally my entire time over the past decade in the legislature for my commitment to ethics and transparency and political reform. I'm also someone who's been a big consumer protection champion, working on taking on the hospice industry, the car dealers to create more transparency in the car purchasing process, the petrochemical interests, the oil interests, and then most recently the insurance industry. A big portion of my district burned during the recent fires. It was a really awful experience. We had to help hundreds and hundreds of people get the support that they needed in the wake of the recent fires, and it was very, very difficult. I was really proud of the fact that my staff was able to help hundreds and hundreds and hundreds of people get the support that they needed, the payouts that they deserved and needed in the wake of the fires. But I also felt to myself, why is it that you have to go to your state senator just to be treated properly? Why can't you get that from your insurance company? Why can't you get that from the Department of Insurance? Well, it turns out there's only 34 people in the whole state handling these calls at the department. That's less than 1 per 1 million Californian. So I'm somebody so I ended up running legislation. I'm working on a lot of legislation to protect consumers in the insurance space, trying to make the system work better for people. I'm very concerned also about ensuring that we not do anything that's going to unnecessarily unduly harm people who live in cities, who live in lower risk areas. The vast majority of my constituents live in the city in Los Angeles. And now, of course, I'm running statewide with a real task ahead to try to talk to people everywhere about these challenges, how we make the system work better for for working people. I'm really proud to have the support of folks like Adam Schiff and Alex Padilla, California Professional Firefighters, California Environmental Voters, California Federation of Teachers, everyone from Jane Fonda to Rick Caruso, an incredible mix of people, the vast majority of my colleagues in the legislature and members of Congress. So I'm someone who's had a long track record of getting very difficult legislation through the legislature. Very difficult bills, from plastics waste reduction to the Voters' Choice Act that we now have. It was my bill that now was tasked with trying to figure out ways to make the voting process easier in the wake of the incredibly low turnout that we had in 2014, that now allows people to vote anywhere they want, within their counties at vote centers or using drop boxes. I'm really, just recently got the endorsement of the Consumer Federation and also the East Bay Times and the San Jose Mercury News. And the point they made was that they sort of looked at what I focused on in the legislature, what my track record was, and getting very difficult legislation through to help solve big public policy problems. And that's what we need to do here in this space. It's all about it's going to be about making sure that we have a system in place at the department that speeds up the rate reviews, that has a more customer service orientation, that is able to better enforce and puts more resources into enforcing insurance fraud. That's a major cost driver. But then in addition, a system that's going to really focus on risk reduction. How do we help to roll out a change in programs and policies that will reduce risk around our state and make it so that we are much less likely to have these kinds of absolute tragic conflagrations in our towns in the future. So anyhow, I'm happy to take questions from any and all. And I'm somebody who went to law school at Berkeley. Have some great memories living in and around San Francisco at an earlier stage of my life. Love your city a great deal, and certainly want to be someone who really looks out for everybody, whether they're Giants fans or Dodger fans. And with that, I'm happy to open the floor to questions.
Mary Eliza, you have the first question.
I'm basically asking questions about what you know about the insurance industry. And one of the questions that I don't want to be redundant in the last thing I just asked, but I will ask a really simple one is, have you talked to any actuaries about what their risk assessment process is? And are you familiar with the situation with reinsurance?
Very much. As I like to, I'm also, I probably now know more than the vast majority of people about these topics, but I'm also, the more I learn, the more I realize how much more I need to know. And I'm reminded by one of my favorite quotes from Jerry Brown, who said when he was running for, I think for re-election to governor the second time. So this is a guy who knows more than anyone about being governor. He said, I probably know more than most, but I know that I know about half of what I need to know to do a really good job. So this is an incredibly complicated position, an incredibly complicated market. Now, look, I know I've spoken extensively to a lot of folks in insurance company leadership about the way they think about risk, including in the wake of the recent Zone 0 regulations that are coming out. And I've had extensive conversations about how we can, think about, vegetation management and risk reduction around neighborhoods in a way that will make the insurance industry feel better about insuring communities. I've visited, Escondido, where they've built a whole community in the very high fire risk zone, where the neighborhood is fully insured because of the techniques that they've used to reduce risk. I've also studied the Paradise example, this poor community that was burned to a crisp in those fires a few years back, and now the entire rebuild is being underwritten by Mercury Insurance because of all the things they've done to reduce risk in that community. Everything from the wildland urban interface, the way they've built out their fire infrastructure, the ingress and egress, the way they've redone the homes, all those kinds of things. Reinsurance, sorry.
Go ahead.
Yeah, reinsurance, we know is at the heart of so many of our challenges right now. The global reinsurance market is really spooked by their perception of risk in the state. They are clamping down. They have constricted availability and affordability, and that's then being passed on to regular folks around the state. And it's part of why people are feeling a little squeezed. One of the things that there's some interesting academic ideas out there about whether we can find incisive ways to engage the state in reinsurance, not comprehensively, but in a really incisive way that could make a difference in helping to smooth over some of the market dysfunctions associated with reinsurance right now, given given the way that they're perceiving risk in the state. But yeah, happy to. I'm sorry, I didn't mean to interrupt, Mari. What you wanted to ask me?
I just had one other thing, and that is
Yeah.
a lot of us have gone to quite a few meetings lately with people who are in a situation where they're either living in a community that has no access out during a fire,
Yes.
or they have concerns about having more housing being built in one of these areas that has limited access areas. I'm just wondering how you feel about the bills that are being passed now to make that even more dangerous situation than it is, and how you feel about getting rid of the second staircase.
Well, let me talk to you about all that. Yeah.
Thank you.
Thank you for the question. I think we share a lot of the same concerns. Let me give you one. After Paradise, I ran a bill to require an ingress and egress routes, when there's major new developments in the very high fire risk zone, to allow just to make sure that people have at least one of their way out after all those people died literally in a traffic jam on the road, burned to death, because there was only one way out of town. And that bill was killed by the building industry because they saw that was a housing killer. More recently, I had a bill to require communities to incorporate insurability into these new developments when communities are thinking about permitting significant new developments in the very high fire risk zones. Because from my perspective, anybody who's building new developments in the very high fire risk zones that are not being built to the very, very highest fire safety standards, including ingress and egress routes, are basically freeloading off of the rest of us, because those developments are basically being built to go straight onto the FAIR Plan, which we're then all on the hook for. We're having to bail out. We're having to subsidize. Every single person in the state is subsidizing the FAIR Plan to some extent or another, and it's basically an example of developers getting rich and freeloading off of the general public. So this is an area that I've been spending some time legislatively. It's hard because, as you say, there's so much pressure in the pro housing world to tear down barriers and not put any additional restrictions on new housing. But from my perspective, greenlighting new housing that's likely to burn is actually not only it certainly doesn't result in new housing, and it actually puts more strains on our housing market and puts more strains on everybody by jacking up insurance related costs and making it harder for everybody to get available and affordable insurance. So I think we share concern there, and I can, Sam, I think he's been jumping on and off the Zoom, and he can maybe put in the chat those two bills so you can take a look at them.
That would be helpful. Also, we could send you some information that we've recently acquired that maybe if you have an email or something, or if Sam has an email, we can send him a link to what we've recently acquired. There's a couple of different meetings, particularly with the people in the San Diego area that are fighting an issue at the moment.
I'd love to learn about it and connect with them and all the rest.
Okay, thank you.
And
Yeah.
Bill, you're next, followed by George.
Yes. Ben, I shared with the group earlier before you were here that I lost my home in the 2019 Kincaid fire. And one of the things that
Where was your home?
It was in Healdsburg.
Healdsburg. Yeah.
Yeah. I mean, total loss.
And
one of the things I had to do is to hire a contractor to come up with an estimate for rebuilding. My question is simply this: do consumers right now have a right to have an independent adjuster step in? And as I understand it, the consumer would have to pay for that independent adjuster. Is that correct?
Yes, they do have the right. It is typically the consumer's responsibility to pay for the adjuster. Yeah. By the way, the insurance industry is always trying to run bills to jam up the adjusters because they don't like them. And I've got good relationships with the adjusters, and I think they play a really important role. Obviously, my grand vision is a world where we don't need them because everything works smoothly and everyone gets treated right, just on the natural. But as we know, of course, we're far away from that. And so I just actually spoke to a big conference of adjusters about a week or two ago, and I think they play a really important role in consumer advocacy.
Do you think it would increase equity with the insurance company if they were faced with the prospect of they having to pay for an independent adjuster if you were dissatisfied with their offer?
Yes, I believe it would increase equity. I do. The chances of getting something like that passed seems daunting to me. I mean, you'd be amazed by how far less ambitious bills are killed in the legislature. But I mean, yeah, it's almost like making sure that people, like a right to a lawyer, right? I mean, a public defender. I could certainly see the value of it. And, maybe I'll circle up with them again and see if they have ideas that are feasible to really expand access to adjusters. Because I do agree that they play a really important role in helping people navigate. Because one of the things that's so tricky, is that people have so little familiarity. I mean, you must know this, having gone through what you just went through. So little familiarity with what to do after after a major fire hits. Yeah,
you learn too late in the game after you've had the loss what you probably should have done on the forefront. So in this particular case, I ended up on the short end of the stick, but that was all the coverage I had at the time. So I think there's issues about coverage. I would definitely be more attuned to in the future. And I just feel that putting the cost burden to hire a contractor, which was not a cheap exercise on top of everything else.
No.
It would have been nice to have that option of saying, look, if we can't come to an agreement, I'm going to have you pay for an independent adjuster.
That's an interesting idea. I've been doing these Zooms for months. I mean, almost every day, several a day. And this is the first time this idea has come up. Let me give it some thought. Let me talk to the adjusters. Let me think about it a bit. I mean, I believe me, I totally see the value of it. The question is, can we actually,
get it passed?
Make that happen? Yeah, get it passed. Yeah.
Yeah. Okay. Thank you.
Yeah. Yeah. Of course, shame on us for having a system that mistreats people so badly, right? I mean, and again, so much of what motivates me to run for this is because I got to see so many of my constituents deal with what you were dealing with, just getting nickeled in time, delayed on their payments, fought, screwed around with by a number of the companies. And of course, the Department of Insurance has come out with a scathing outline of all of the malfeasance and misbehavior by State Farm, which I recommend anybody to read if you really want to get mad at the system. And I think we need somebody in this position who really is focused on making the consumer experience better. Because quite frankly, I think it'll help in a weird way, it'll help the market, right? Because if people feel confident that insurance will be there for them when something goes wrong, they're more likely to buy insurance and participate in the market. And if they feel as though the whole thing is like a hope and a prayer, why would you ever want to get anything more than the very barest bones insurance that you need?
Plus, I think it would definitely speed up the settlement process if they faced the prospect, instead of dragging it out, as in my case, it took almost 2 years.
Now, I'm working on a bill with Senator Perez to penalize unnecessary delays in payouts. I think it's SB 878. We're also doing a bill to create more enforcement against bad behavior by the insurance companies. I'm also doing, we're also there's another bill that has to do with this too. So I'm hopeful that that kind of work will make a bit of a difference too. that we're going to finally put some more teeth into the law and really go after this kind of bad behavior. I'm also interested in doing a report card that would outline the way that these companies behave post-disaster, so as to at least provide some information to the public about the different responses of these companies. Because I will say, some companies actually behaved honorably. Others were absolutely atrocious, but some some did treat people right. And the funny thing is, people have so little information when they're buying insurance. I mean, you look at the ads. I mean, all their ads are just vacuous gags about geese and emus, and there's nothing about the substance, about the quality, the caliber of the products. And I do think having some more exposure directed toward how people are actually treated by these companies post-disaster is a really important thing. And I think the insurance commissioner's office could play a big role in that. But I appreciate your idea. And I'll have some conversations.
Okay, thank you.
Yeah. And George, you're next.
Thank you. Hey, Ben, thank you very much. Really interesting. I think a lot of your platform is obviously risk reduction. That's what it sounded like.
Yeah.
And you also spoke.
On the long. Yeah, sorry.
No. That's just what you said. Yeah. I think that makes perfect sense. It's hard. Some areas are very overgrown and grassy, and other areas aren't. But the other thing which really interested me, what you said, was forecasting. Now, forecasting risk, as you well know, I'm sure, is very difficult, especially over certain time periods. And I'm curious how you would forecast and how you could tie that into certain ratings if people were meeting the forecast that they had agreed to. And I'll end with, I'm just curious what you think of single payer insurance. And I want to know, nobody has yet to talk about the cost. Do you feel like what you're offering would increase the cost of insurance by a great deal, keep it the same?
No. I mean, my goal is to try to reduce the cost of insurance. I think the only way, think about it, right? There's only three ways that the insurance companies make money, right? They raise people's rates, they nickel and dime people post disaster, or we don't have disasters in the first place that they have to pay out. And obviously, by far the best, option of those three is the last one. From my perspective, the insurance companies, I think, are all, in a weird way, they pay a lot of lip service to the idea of risk reduction, but at the end of the day, they figure out a way to make money regardless. And so it's really up to us to push for policies and practices that are going to really result in risk reduction that will at the same time result in lower premiums for people. I think in the end of the day, I don't think we can demand of the insurance industry that they have to go out and cover everybody, in the very high risk areas without them actually putting in the time and energy and investment to reduce risk. The flip side is I don't think we can ask communities and individuals to do all this risk reduction work if people aren't going to, if they're not going to get affordable, available insurance on the back end, because the whole thing just simply won't work. I'm actually working on a bill right now to provide low interest loans for people to harden their homes. But I think we need to expand that out for more investment in community-wide resiliency. It was at the heart of Prop 4, the bond that I worked on. So, from my perspective, this is all about trying to reduce cost. I think single payer as healthcare exists in a lot of countries. For catastrophe, it doesn't exist anywhere on planet Earth. The closest thing that exists is in New Zealand, where I think they cover up to about $167,000 per unit. So the question would be, how do we do this? I think there are some ways for the state to engage in insurance in a way that will lower costs, but we have to be we have to be incisive about it. That's really the way I think about it. Instead of just we're trying to wave a magic wand and imply a massive, a comprehensive program tomorrow that is totally untested anywhere on planet Earth. We've got to do this in a way that I think is more incisive and doesn't break the bank of the state. and that it's actually going to be feasible and really focused on trying to reduce people's risks and premiums right now.
Okay,
That's my outlook.
thank you.
So, yeah.
Hey, everyone.
Listen, guys. Yeah.
Oh, sorry. Go ahead. I was
No,
just
sorry.
going to say this is the last question, so we unfortunately have to get you off to the next meeting.
Yeah, I apologize, guys. If there's a quick question, I'm happy to take it, but otherwise, I got to jump. But I'm happy to come and meet with you guys in person. I'm in San Francisco from time to time, and appreciate your advocacy in the community too.
Well, thank you so much for speaking with us tonight.
Yeah.
Thank you, guys. All right.
Thank you.
Bye, guys. Thank you. I appreciate it.
Bye.
Hi, everyone.
Hi.
Hi.
Hi,
Hello.
good to see you in very warm San Francisco. Thank you so much for having me and for your flexibility. My name again is Jane Kim, and I'm running to be our California State Insurance Commissioner. And I'm running for an office which oversees a $3.3 trillion industry. And despite the narrative that the industry would like us to believe, it's an industry that is doing exceedingly well. Just property and casualty insurance industry alone in 2024 made $170 billion net, with its top 10 CEOs making $391 million collectively. Meanwhile, we do a good job of regulating us. We, as consumers, are required to have insurance to drive to work, to qualify for a mortgage to buy a home, to open a business of any kind. And so for this reason, we have to make insurance affordable and available. Otherwise, we're going to shut everyday people out of our economy. I am running for this very under the radar and under leveraged office because I believe that this office could be a powerful ally for working Californians and for our state. And I want this to be a state that works for all of us. You all know me, so I won't do a very long intro of who I am. But as you know, I served here for 12 years on the San Francisco Board of Supervisors and School Board. I, the last 4 years, have been the California director of the Working Families Party, working to elect corporate-free candidates up and down the state, from school board to the state legislature, and to advocate for policies to protect Californians and consumers. And prior to that, I spent a year working for Senator Bernie Sanders as his California political director, really building an electoral infrastructure up and down the state, from San Diego to Northern California, which brings me to running for this office today. We are currently experiencing, I would say, two major crises. One is the growing and incredible wealth inequality here in this country and here in the state. And two is climate catastrophe. And what is so interesting about the insurance commissioner's office is that this office, from a policy perspective, sits at the intersection of both of those issues. And so I want to transform this office to really be, again, an ally and a powerful platform for working Californians to make this a state that works for all of us. And so I'm introducing a very ambitious policy platform because I don't think that just tinkering with the system is going to solve the systematic failure that is the insurance industry today. The premiums are too high, they're canceling our coverage, and even if we have insurance, they fight our claims every step of the way. I'm proposing a single payer home disaster insurance program guaranteed for every homeowner in California, publicly run nonprofit. This is actually modeled off of programs that we've seen in France and Spain and New Zealand. I also want to expand our already existing nonprofit low-cost auto insurance program. And finally, I want to make claims fair and quick. And so there's a couple of rules that I've been proposing. One, I want to freeze your rates and your coverage when you file a claim. You shouldn't be penalized for using the business that you've been paying decades into. And two, I want to counter the industry practice of denying, delaying, and underpaying valid claims by having them pay you interest every day they deny, delay, or underpay a claim, just as they assess a late penalty on us or cancel our coverage when we are late with our premiums. I thought I would open up for questions first, because I kind of gave a lot of information all at once.
The first question is, have you talked to any actuaries or any, what was the other one? People about how they assess risk, how they handle risk assessment? And are you familiar with some of the problems that are going on with the reinsurance program in the state?
Mhm. So, hi, Mary. So in answer to your first question, I have a policy, a rather, a really good policy team, and we meet every Friday, and we have been since December. And we sit down with a variety of experts every week, from claim adjusters, from people within the insurance industry, to folks that study it, as well as folks that actually even work in workers' comp and bail bond, because this office also oversees those industries as well. And so, what I will say is that the insurance industry is set up to price risk, but they don't address it. The only way to actually make insurance affordable and available is to address risk. And we used to in this country have a billion-dollar storm every 3 or 4 months. We now have one every 3 weeks. So part of the increase in home insurance, for example, is truly the increase in risk. It is climate disaster. Now, something that is not talked about a lot is that the insurance industry is a huge institutional investor of fossil fuel, and they're huge underwriters of fossil fuel that is driving climate disaster. And then they cancel coverage on the homes destroyed by it. And by the way, I should have mentioned from the outset, the insurance industry's primary business model is not insurance. They take our premiums and they invest it in the stock and bond market. That's why they're huge institutional investors in fossil fuel. So the reason why proposing a single payer nonprofit publicly run program is that the way it works in other countries is that they actually use the returns from the premiums to actually invest in infrastructure, fireproofing, floodproofing, things that actually drive down risk, because they can't reduce their risk by canceling coverage on the people that they view as the most risky, because that's what the for-profit insurance industry does. But we have to find some form of security and safety and protection for now a third of homeowners in California that are now in fire risk zones. And by the way, that region has grown by 116% since 2011. So just because we don't live in a fire zone today doesn't mean we won't be in 5 or 10 years. So we have to come up with a different solution to address this issue. Your second question, I'm sorry, was
About reinsurance.
yes, reinsurance is a huge issue, and I'm also very open outside of single payer to exploring a publicly run nonprofit reinsurance program, because as we know, that is also driving up the cost of insurance for those that are providing insurance to us.
Okay, so I had one other question, then I'll shut up. And that is, there are a number of bills that are being suggested. There are some bills that we just recently found out about that are supposed to protect people who live in places where there is some kind of fire risk, so that are able to get in and out of their towns and communities or streets, egress and ingress, all that. And we understand that there are bills being written now to override those. And there's actually a case right now in San Diego that's been tried a few times. They keep winning, but they keep appealing the win of the people who don't essentially want to put any more people in a fire risk zone that has only one exit. So are you familiar with some of those bills that are being ignored, some of the state regulations? We're just talking fires here, that are being ignored by the people that are so jazzed up to build more housing all over the state that they're putting people in fire risk zones. And are you familiar with some of the bills that are being written to try and overcome those problems?
Yes, I am.
Okay, thanks.
Glenn, you're next.
Yes, thank you. I wanted to ask for maybe some more information about the single payer nonprofit insurance. And would the public bank be able to be a part of that that system, hopefully?
Yes, so it's very similar to the concept of a public bank, but here's one advantage of a public insurance program. There are no federal hurdles or hoops to jump through in order to create one. Because unlike the banking industry, the insurance industry has zero federal oversight, and that is by design. The insurance industry has spent millions of dollars to make sure that they are never overseen by the Federal Reserve, even though they're basically banks, because as I mentioned, their primary business is not insurance. Their primary business is taking our money and investing it. It's what they call their float. That's actually where the majority of their revenue comes from. So yes, it's a similar concept, but a bit easier to create.
Thank you. Thank you for that.
George, you're next, and then Dave.
Yeah, hi Jane. Good to see you.
Hi,
Um,
George.
I would like to go revisit what Glenn was saying about single payer insurance. Does this insurance, I know it has been successful in some countries and it has not been successful in some other areas. How much should a city in California expect their insurance to increase? Do you have any figures on money that would we be paying a lot more, a little more, less?
Yeah, that's a very good question. Um, so there's not a lot of single payer home disaster insurance models. I've aware of France and Spain and New Zealand, and they all work.
Yeah, right.
And by the way, interestingly, provinces in Canada have single payer auto insurance as well, which is also very interesting. Also
Don't
nonprofit.
they have medical as well, don't
They
they?
also have single payer healthcare. Every province in Canada has single payer healthcare, but 3 provinces in Canada also run single payer car insurance on top of that. British
Oh,
Columbia and Quebec have it, and it's nonprofit. So when they have excess capital, they have to give refunds to all of their policyholders. In fact, during COVID, my friends in Vancouver got hundreds of dollars of refunds because they're not allowed to keep excess capital in their reserve. And a couple of weeks ago, you probably saw the headlines. Uh, um, Travelers Insurance, which I think is number 5 out of the top 10 insurer in the country, made so much money in the first quarter of 2026 that they had 2.2 billion in excess capital. What did they do with the 2.2 billion? They didn't invest it in prevention. They didn't give it back in the form of refunds or discounts to their policyholders. They gave it all to their shareholders. So what a single payer system would do, um, and I'll describe New Zealand's because it's a model that I'm very interested in. You would still get your home insurance on the multi-payer system market, meaning you would still get your regular home insurance, wear and tear, burglaries, the fire within the house, from State Farm or Farmers or AAA. But just there would be a natural disaster levy that each insurance company would then pay to the state of California. The state of California would take those premiums that you're already spending, by the way, it'd be the same amount, whatever you're already spending today. And we would take those premiums and we would invest it in the bond market. Except those returns would be kept with the people of California, not by AAA and State Farm and Travelers. And when we have excess capital, we would invest it back into infrastructure and fireproofing and floodproofing, because the only way that a state can lower its risk is by preventing it. The insurance industry lowers their risk by dropping coverage on their riskiest home. In fact, what we're seeing across the country today is that the insurance companies are in a race not to lower prices, they're in a race to drop the riskiest homes as quickly as possible. Some of my competitors or opponents will tell you, we just need to bring all the insurers back to California. We have to create a healthy marketplace. If we have a lot of competition, then prices will go down. It's funny that they're kind of sprouting that mythology, because we just have to look at Texas or Nebraska. Texas and Nebraska have almost zero regulation of the insurance industry because insurance is regulated individually in each state. They have all the competitors in the world. Homeowners in Texas pay on average $4,000 more in home insurance than Californians do. And so what we're seeing is that in a state where there are tons of companies, they're not actually lowering their prices. They're all price fixing. They're all staying and hovering in the same arena, but they're all trying to cancel coverage. They're all trying to cancel coverage very quickly. So I just think we have to come up with a different system. And maybe it won't be single payer. Maybe it'll be a public reinsurance program that can take some of the risk away from the private market. But I do think the public should do something, because we're going to pay for it anyway. We're going to pay for it in the form of FEMA dollars, rebuilding, state and federal funds. What I'm proposing is that we keep some of the premiums that we're already spending and take it out of the private market and store it in public hands.
Thank you.
Dave, you're next. And you're
Thank you. Jane, I
Hi,
want
Dave.
to ask you about responsiveness. All voters want to make sure officials will be concerned about the average folks and not just the elite, powerful, rich. And we have a bit of a track record here. This organization sent you 2 resolutions when you were a supervisor, and you didn't support either one of them. It seems that you really supported the powerful, rich elites. You led the board in destroying Harry Bridges' historic longshoreman headquarters building that was used during the 1934 strike, which was a shame. And you also supported the 75 Howard high-rise luxury condo building that sits mostly empty, except probably for oligarchs, using it to hide their money. So those resolutions came from CSFN. Do you regret your votes on either? And how do we know you'll be responsive as insurance commissioner? Thank you.
So, Dave, I'm not familiar with the first resolution on the Harry Bridges building.
Well,
75 Howard I am, because that's in my district, but I don't know if that was during my time on the Board of Supervisors.
yeah, the funeral for the 2 slain longshoremen during the strike, killed by the
Oh, I'm
police.
very aware of the history,
Well,
but I don't remember a resolution that I voted against.
yeah, the current owner basically destroyed the building unnecessarily. We asked you to get them to, at least try to do some basic preservation. And it didn't happen. The building was destroyed.
Mm-hmm.
It's basically the funeral procession that went down Market Street and basically locked up the city for a day started from that building.
I know that history, Dave, but I don't think I was on the board at that time because I don't have any recollection. Whereas 75 Howard, I do remember that is in my district, and I did support that development. Here's what I'll say, Dave. You know my history and my record over my 12 years on the Board of Supervisors. I have been one of the biggest champions of everyday people. I think of anyone on the Board of Supervisors. I passed 2 progressive revenue measures, both incredibly progressive, that taxed commercial real estate and that taxed building transfer taxes at 10 and 15 million above. That has now made San Francisco the only city to make community college tuition free for every San Francisco resident. To this day, the only city. I also worked on passing Baby Prop C in 2018 that is now bringing $140 million in annually to our city that is subsidizing childcare for working and middle class families. I passed the first $15 minimum wage ordinance in the state of California with no carve outs. I voted against contracting out employees. I supported public sector union employees, even during an economic turndown, because I felt that was when we need to support middle class jobs the most. I introduced the first ban the box ordinance in the country, which prohibits employers from looking at your arrest and conviction history before they interview you. Now, after the interview, they can look at those records, but they can't look at it before they decide to interview you. I passed a Safe San Francisco ordinance, which provided more transparency on the work that our San Francisco Police Department was doing to target Muslim, Arab, and South Asian Americans without any type of warrant and without any reasonable suspicion. So I am actually very proud of my record of standing up for everyday people. I've also attended your meetings in person when asked to come, and I will continue to do that. In some ways, you have some home court advantage because I live in the city and county of San Francisco, so I will actually be spending many, many more days here in terms of coming to meetings when you request it. In terms of development, I negotiated the most affordable and middle income housing of any supervisor during my 8 years, and actually of any legislator in California. And I'm very proud of doing that. But actually, there's really no but. I mean, I really do feel like I've been very balanced in my approach to development. I've stood with many folks around things like including the mission moratorium to make sure that we were doing thoughtful development and not pushing out working class and middle class families from San Francisco to the best of the capacity that we have. And so I do feel like I've had a very balanced approach to working on development in the city.
Well, we only had one meeting with you in your 8 years, and it was actually about the Harry Bridges building, and it included neighbors from other buildings and Longshoremen, trying to get you to give it some basic preservation, and you went the other way. And the 75 Howard luxury building, they got more exemptions and variances than local developers get. Um, and you would not meet with us on that. And you basically led the board, since board members follow the home supervisor. You basically
I did lead on 75 Howard. Again, Dave, I don't remember this other request, and my memory is usually not that terrible, but maybe it is. But they agreed to 30% affordable housing, and so that was the request that we made. It was, a parking lot, as you know, and there wasn't a lot of, I think this is just where we disagree.
And
But I did listen, and I've gone to countless meetings. This is not my first meeting with the Coalition of San Francisco Neighborhoods.
George, next question.
Yeah, I do remember Jane coming to at least one meeting. And I also remember that she had the poorest district and the richest district. So she had the most trouble or most diverse uh, supervisorial district in the city. And her and I were far apart on a lot of issues, but we were able to work together and agree on several issues on housing, on historical. So I give her a very high rating personally. So that's my opinion. Thank you.
Mary Eliza?
Okay. I met Jane when we were fighting Scott Wiener over CEQA bills. Okay. That was how it all started. And you see where we are now. Also, Jane had the balls to run against him. She won in the primary and lost at the in the November election, but not by very much. It was a very close race. So that's my recollection of what we did together with the help of Eric Brooks and some other people that really, and people from Hastings Law School, I believe. We had people helping us deal with the Wiener dude back then. And so I feel very comfortable in most of our relationship. Also, Jane was involved when we started trying to protect the artist spaces with Proposition X. And we're still fighting that battle now, or we're kind of, I think, winning the battle again. Deja vu.
PDRs, right.
I know I've been hearing about this with from April Veneracion, who was at my office during the time and wrote Prop X, Mary, with you. And,
Yes.
And John Elbling, who recently left us, but did so much to protect PDR and arts in the south of Market. But I do feel like I led a very balanced approach in supporting a lot of our protections like CEQA. I always thought that those levers were very important to make sure that we are fighting for well-planned, neighborhood-oriented developments that had input from the public.
unfortunately, you lost and he won, and we've been dealing with that problem ever since.
I know, Mary. I wish I had won that seat too. And I thank you all so much for your support in 2016. You know, he outspent us 2-1 in the June primary, and we came in first place. And he then outspent us 4-1 in the general, and we just lost.
I know, but it was close. It was definitely close.
Thomas-
Also, I'm sure you're aware of the fact that they've renamed it again. It's no longer PDRs. Now it's called Employment Development Opportunity Centers.
Oh, that kind of covers everything. That covers office. That seems such as okay.
Let's see, could we have one more question from Thomasita?
Yeah,
Hi, Thomasita.
Hi, Jane. I just wanted to bring to your attention the fact that tomorrow at the Board of Supervisors, they're going to be addressing Free City. And if that was your pet, well, the mayor is apparently trying to take the money from Free City. So everybody here needs, to know about it. People want to go down there to the hearing. That's fine. Also, but you worked hard for it. And then first of all, the Mayor Breed put it in the general fund instead of addressing, giving it straight to city, and then took half of it, I understand. And then now I think it's completely at risk because I think my understanding is that the new mayor wants to just take it all. So that's a point of information.
Thank you, Thomasita. Is that going to be tomorrow on Wednesday, or is that did that already happen today?
I think it's tomorrow.
Okay. I've told AFT 2121 to reach out to me when the mayor's office threatens that funding. One of the last things I tried to do before I termed out was I passed a charter amendment set aside for a free city. But then after I left the board, it was pulled. Yeah. I actually, that if you want to talk about regret, that's something that I do really regret not having completed the set aside.
Yeah. You never know who's gonna
I know.
somebody worse could follow the one who's already not good.
Yeah, and it's not a lot, it's a very affordable piece of the budget to guarantee tuition for every student in City College. And the state of California used to do it. Community college was tuition free everywhere in California until 1983, as you all remember.
What happened in 1983?
They started charging tuition.
I think it might have been Reagan came in. Forgive me.
I'm sure Reagan, I like to blame Reagan on a lot of things.
Yeah, we can blame him for a lot. I'm sorry.
Oh, Jane, I want to thank you for speaking tonight.
I know. I went way over time.
No, it's not that you went over. Ruskell is messaging me. You've got something else to go to tonight.
Oh, Ruskell has a better sense of my schedule than I do. Thank you, Ruskell. There's more information about me on the chat. You all know how to reach me. George has my cell phone number. He called me the other day. By the way, Mary, it's nice to see you. It's been some time.
Yes.
Thank you so much for your time today.
Okay. We'll keep going.